Good morning. This is Ken Long from Tortoise Capital with a review of the weekend trading report for September 26, 2015. Market has calmed down a little bit into bearish normal, although it doesn't look good. On an annual basis with weekly RSI 14, it's 38 out of 100, so at the lower end of neutral. On a shorter term 10-day basis using the 10-day NDX, we're just on the boundary of oversold at 20 out of 100. In the market mosaic, price relative to the 200-day moving average is red bearish at minus 5.71%, so we're about 3.5% under the threshold for bear markets. Slope of the 50 is red bearish at minus 0.83. There's rabbits outside, and the terrier wants at them. ADX remains strongly downward trending at 26. The risk index is the 30-period moving average of the VIX divided by the 10. The threshold between risk on and risk off is 1.0. Current reading is at 1.098, so we are in risk on conditions. I would take this one with a grain of salt. I'm using a command to override on this one because the VIX reading a couple weeks ago was so large. That means the improvement in the VIX has moved it into positive territory here, but I would wait a few more days before acting on this on swing trades. So we're going to use a command override. The Z-score of that risk index comes in at 1.08 when we compare it to the last 5,000 trading days and find the standard deviation. You can see the 90-day histogram here. You can see the magnitude of that risk Z move, and so although we have moved into this positive territory, I'm still taking this market one day at a time and maximizing the intraday opportunities. No change in blended monthly rebalancing. Next reevaluation is due on or about 1 October, and you can see the strength leaders based on Friday's close. In ETF2, it remains at 0% exposed in the theoretical model, and in the model portfolio, it's at 10% exposed. These are the positions and rankings in the blended monthly rebalancing for ETF 13 and ETF 32 portfolios. And in ETF Max, you can see the VIX is still is dominating here. The market neutral momentum fund is an inverse volatility, and you can see that got hit pretty hard in this past week, but this has been dominated here by all the interest generating bond funds. S&P 500. Cablevision remains interesting. I'll be looking at Nike, Netflix, and Assurant, and Tesoro Petroleum. Especially these have had some extraordinary weeks while the rest of the market was down, so we'll be taking a look at that. Royal Caribbean may have an opportunity here for buying quality on a rebound. Market health check. The vertical blue lines are 10, 20, and 30 days worth of look back. Horizontal purple lines are price targets to the upside, a return to resistance that used to be support here at 204, then the swing high at 212-ish. I'm placing fair value here at the confluence, the intersection of the 10 and the 30 regression lines, and the bottom half of the river, which is sloping downward. Support levels here that are crucial to that they hold. That's at 186 and 183. If the bottom of this river fails, then I have a short side bias intraday. If this holds, this is an interesting moment of support, and then we would see a low, a swing low, a higher swing low. Thin evidence for belief here, but that's what makes it an intriguing upside posture. If we were to see price get through the north skin of the dragon, that would get me long tactically, but I would still be playing it intraday. You can see the jaws of PPO have closed. This sell-off of this week really closed the long side bounce that had occurred over the previous 20. So this is a market that's at a pretty interesting critical state right here at the bottom of the river, looking for support. Everything on a cash position in the ETF2. The S&P at 56 is better than the globals at 48. Inside the U.S., it's technology, large caps, mid caps, small caps. Two strongest sectors are U.S. large and tech, and the two weakest remain Latin America and emerging markets. The S&P 500 is actually looking pretty good right here. The sector spiders, with the exception of materials and energy. Healthcare still has pulled back further than I expected, and so I'm hunting for value plays there in the healthcare sector. But meanwhile, utilities and defense are the only thing above their own 5-week price. Market model here, everything in the U.S. is above average except for this lower left, the southwest corner here, mid cap and small cap value and small cap blend. So you can see strength is up and to the right with technology and large caps. Everything Asia below average. Latin American emerging markets getting crushed. Brazil is just absolutely horrible. Makes it a great trading target. Even Europe is below average, and we're seeing rebounds here in the other asset classes. And I think that more of that is on a relative basis with gold and silver than any significant outperformance to the upside. But treasuries and corporate bonds remain interesting. ETF top 30 shows the same story as the blended monthly rebalancing look. See the strength here in treasuries and utilities. Inside the Dow 30, Nike, Visa, Home Depot, and Goldman. Nike will be of great interest. We saw that on the blended monthly look. And then new strength here, McDonald's, Microsoft, Travelers, and Coke. Coke hasn't been up here for a while. McDonald's has made a nice long march back from near the bottom. I like Intel. That's white and yellow, along with Apple and Procter & Gamble. I think Apple is the tell. I think that's still an opportunity. Looking at the daily reports. Pardon me. So a couple 5DDs here in Caterpillar and Disney. A dead cat bounce maybe in Procter & Gamble here on the overreaction short side, and a channeling signal in United Health. 5 RSI2 candidates. In the ETF 30, plenty of 5-day downs to choose from, a handful of dojis, lots to choose from on the auto framer and on the RSI2 value as well. And framing data for the auto framer and setups for the regression line fractal, plenty to choose from here. On the top shelf, which are the value plays, the ones that are the most ATRs below their own fair value of the regression line 270. And then on the bottom shelf here, the relative strength leaders and how far above their own regression line 270 they are. Only Nike right now, with this negative number, means that it's above its 270. Everything else is below. So Nike certainly deserves our attention. The daily squeezes, lots again to choose from here just in the Dow and the ETF 30. Caterpillar I like, nice trading target, and XLF especially. This combination of XLF and JP Morgan could be very interesting. Just going to flip back through the reference data for you. Z-scores of the regression line slopes, nice recovery here on the 30, almost coming back to the low end of normal. The 90 has started to turn, the pullback on the 10. I think this presents an opportunity here. if it can hold the bottom of the river. I'm really watching this carefully because this would still give us a series of three higher lows, and then inside the river sets up a new frame. Lots of room to go to the top of the frame. I actually like this as a tactical setup for as fear diminishes. I like that trade. And that's everything I want to cover. We're off to a soccer tournament and a tennis tournament. It's Ken Long from Tortoise Capital. Keep your risk measured and your powder dry.